And now it's time for a Retirement Watch, which is being brought to you today by VectorVest. You can find them on the web at vectorvest.com. Now, one of the major investments that boomers and retirees have is their home. And now it's being reported by Zillow.com that almost 1 out of every 4 homes in America are worth less than the value of their mortgage. Now, this is a crushing blow to seniors, but the real question remains, is there still hope for boomers who wish to cash in the value of their homes at some point and retire off the proceeds?
One of the ways that we want to do on the government side is the opposite of what they're doing in Washington, is give some certainty to the business world. You all know money better than I do, but you know when there's a certainty to the investment, there's a solid foundation and things can work out. That's how we turn around that market, because when you take away the dream and your biggest investment in one swoop, we're all lost. And we've seen what it's done to our state, and it's going to only replicate across the country.
The possibility might come, but look at the amount of inventory on the market. That's the problem, is the inventory. Flat out. We have 10 months of inventory. We have 30 months of shadow inventory. You know, we have the inventory artificially propped up. Until the inventory comes down, you're not going to see prices rebound and, you know, rebound to the point where they can cash out. You know, 1 out of 4 is a staggering number. I mean, I think back in April, the number was 380,000 foreclosures nationwide. I mean, you look at this, think about some of the numbers. I mean, it is a staggering figure of what's going on, where the shadow inventory that still has to go through the market. So until the inventory and everything's flushed out, and that's when you can actually sustain, get some type of recovery where maybe they can cash out of their homes. Because 1 in 4, I mean, 25% of people, that's a, you know, a lot of people depended on that their entire lives, and now it's gone. So what do?
Well, I think that people will be able to cash out of their homes eventually, but in between it's going to be a long period and a very painful one. Because what I see happening in the short term to medium term is a depression. And that's going to drive all prices down, house prices and everything else. And people are going to be really pushed for cash. So my advice is save, don't spend. Then eventually you're going to see a wave of inflation hit as all this stuff that's been issued as paper money and stuff hits the market and into the economy. And that's when real assets will start to rise again. And one of the greatest real assets, of course, is a house. But it's out there in the future, but it's going to be a long, hard, painful haul to get there.
And I think you can't be thinking that the housing market is your vehicle to success in the short term. We saw so many people flipping in the region that I live in. Live in the house that you want to live in, not about what you want to sell in a few years. And over time, we know, just like with the markets, the long-term investor will win. But don't expect that short-term gain. Live in the house you want to live in, when you can afford, and then you can think in a thoughtful way. And the government can help you by, again, giving you structure, giving you certainty.
That's a very good plan. And you know, when it comes to retirement, you know, I've always focused on one thing. I've said this year after year, you know, for retirement and the situation that we're going in right now, you know, you have to preserve your capital, because you don't know what's happening, whether it's the housing market, there's uncertainty in the stock market, there's uncertainty all over the place, and you have to preserve your capital. And the ultimate preservation of capital is gold. And that's where you can hold your asset. You know it's going to be there. It's been around 5,000 years. It ain't going anywhere. The intrinsic value, it's there. So that's where, when it comes to retirement, I think you should preserve your capital, put it away, let it sit, stock it away. You know 10 years from now, you're not going to have nothing to worry about.
One of the most insidious taxes, of course, when you talk about preservation of capital, is capital gains tax, which is not discounted for inflation. And that's got to change. That's where government's got to say, right, if we have a capital gains tax, we're going to discount inflation in between. Because you have people putting their money in an IRA, and they end up paying tax on the gain in the end, at a lower rate maybe, but the capital gains are taxed without netting out inflation. That's why people should consider rolling their 401ks and IRAs into a Roth IRA, because a Roth IRA, you put after-tax money in, but all the profit is tax-free. And that's one way to beat the government at their own game.